Hey, what's going on, everybody? It is Thursday, September 30th, end of the quarter. Had a big sell-off today. I want to talk about what's going on. Not looking too good. First of all, the Fed did 1.6 trillion reverse repo today. They keep going up. And the effect or the impact of these reverse repos over the last 3 weeks, we have seen a drop in bank reserves by 165 billion. Bank reserves now are at the lowest level in 2 months. All right, now some people might think, oh, that's terrible. You gotta always look at these things as, kind of like cause and effect. Like something happens, then there's a reaction to that. That's like physics. When you push against an object, there's a force applied, the object responds to that force, all right? So we are going to see, I'll make this prediction first, before I get into the markets and what's happening with the fiscal flows. It's very important, and I'm going to talk about that. We will see a significant pickup in bank loans and lending. And that might sound to a lot of you like it doesn't make any sense, because I think a lot of you probably think that banks, lend out their reserves. They don't lend out their reserves. I mean, they might lend it to each other overnight or short term for clearing purposes, but they don't make loans with reserves. Loans themselves create reserves, and that's a topic for another video. I'm not going to go into it right now, but you gotta get it out of your head. When you see like the Fed or central banks, pumping, they're juicing, they're pumping, that's not to create lending. I mean, although I think some of these central banks and the members of these central banks, they might think that's the case, but that's not what happens. Any banker will tell you that. Any banker will tell you that. They don't lend out their reserves. They're there. They're held, at the Fed, and they're used for clearing or to meet regulatory requirements. It doesn't work that way. So you got to get that out of your head. And actually, a drop when reserve balances go down, it actually creates some room on bank balance sheets for other assets. In other words, loans. Okay? Now let me talk now about what's happening with the fiscal flows. The fiscal flows are slowing down. I had a guy on here make a comment a few weeks ago saying, oh, Mike, you don't know what you're talking about. The markets don't follow fiscal flows. You're an idiot. You're stupid. You're a jerk. You're a dummy. Like typical comments that people post on here. Well, if you go back to April of 2020, with the fiscal reaction, the massive fiscal reaction to the pandemic, I said right there on the spot when the market had that gigantic collapse, I said, you got to buy now because the flows are expanding, significantly, extraordinarily, and it's going to push the market up. And all along in this entire, 17 months that we've been going up, what do I talk about in every video? The flows, the flows, the flows. And as long as those flows have been positive, accelerating, expanding, there were a couple of times where I kind of, got fooled because it looked like the flows were slowing up, but that was just a temporary, it could have been a calendar related thing or whatever. But each time when they re-accelerated, I said, you got to get back in on the long side. But I was concerned, starting with the suspension and then the end of the unemployment benefits, how that was going to hit. And then I've been talking about the debt ceiling and how that could curtail the flows. By the way, we're not even into that period yet. But now it's becoming pretty clear that the flows are slowing down. I said this is negative for the economy in the sense that we're going to have a slowdown in economic growth the growth rate, the GDP growth rate is going to slow down. And, forecasts are already proving that to be true. They're looking at third quarter growth around 3.5% or something like that, down from 6.5%, in the second quarter. I was telling you guys that in March, we had a 1 month flow of nearly $1 trillion, 984 billion in March. We're down to 570 billion now. I've been talking about that, okay? And the stock market, I know a lot of you think like the stock market doesn't reflect the economy. It does. It does. It reflects corporate profits. We're already seeing, I think, a pretty significant or a broadening out of the number of companies that are, issuing lower guidance for their earnings. So all this is related to the flows. I've said many times that about 40% of government spending flows to corporate profits. When you slow down that rate of spending, again, I'll use the swimming pool analogy. The water coming out of the pipe into the pool is slowing down. So the pool doesn't fill up as fast. The worst case is when they suck the water out. That would be when the government runs a surplus. Luckily, we're not running a surplus. However, the fiscal support now, let's call it that, the fiscal support now is decelerating. It's going to have a negative impact on economic growth. That doesn't mean, we're going to go into recession, but we're dropping down from a 6.5% to maybe a 3% or a 3.5%. Given that scenario, and given that you're going to have a slowdown in corporate profits, and let me just make one comment on that, and I have been talking about that, companies are going to respond to weaker earnings growth. How do you think they're going to respond? They're going to cut costs. What's the easiest way for them to cut costs? They're going to lay people off. So we're going to see the unemployment rate start to climb back up. Actually, today we saw weekly unemployment claims up for the third week in a row. It's at a 2-month high. Okay? So all this stuff that I've been talking about is happening. Now, against this backdrop of this slowdown in flows, the stock market is way overvalued. And it's going to come down. It's going to come down. And over the past couple of weeks, we've had these days where the Fed has been doing large reverse repos. And that's actually been bullish very short term when they come in and they do that. And actually today I sent out an email when it was announced that the Fed did a 1.6 trillion reverse repo. And I said, you're going to see a bounce. And then you sell into that bounce. And sure enough, NASDAQ went positive. The Dow and the S&P cut their losses. That went up, and then you sell into that bounce, and the whole thing really came down hard at the end. So that's what's going on. Now, it's going down. And it's going to go down until it reflects the new reality, which is a slower growth rate. And like I said in past videos, the stock market tends to overshoot. All right? We possibly overshot on the upside. We're going to overshoot on the downside. This is not a recession call. We're going to settle in. Actually, I was saying we're looking at about 570 billion a month in flows. Actually, now I'm thinking it could be less than that. We could be back to the pre-pandemic level of around 420 billion a month, which I think puts a significant portion of the last 17 months stock market rally in jeopardy. All right? It's going to create some great buying opportunities, but just not right now. And again, we still have to worry about the debt ceiling. That's mid-October or something around there. Yellen said if she has to cut spending, that's just going to make things worse. And also, if the Fed, here's the thing, I'm really, not really, but I'm also concerned. If this, the blame game is going to get thrown around right now. It's this guy's fault, it's Biden's fault, it's this fault. If the blame goes to, hey, it's inflation and it's, see what happens with inflation, and if the Fed kind of reads that the wrong way and says, oh, we got to be tough now and we got to taper, it could just make the downturn that much deeper. I'm kind of worried about that. So you still got the debt ceiling sitting out there, which is a problem. And we still don't know how the Fed is going to react. And the Fed, unfortunately, they listen to what people say. They listen to what people say. So we'll have to see. Anyway, don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. But the market is going down. Bye.